Hello everyone, welcome to today review from the markets. After another crazy and insane day, we closed at on Friday near the lows on the day. So and right here today we open on the green and we had a big short squeeze up. And the options market pretty much quiet. We had some bullish options activity during the day, but what was really relevant it was that actually we had the biggest breadth market breadth of the year so far 2021, and let's see if we are going to have follow through. We are not out of the woods looking for the spy. We are still not out of the woods. We were able to recover the 8 and 21 day moving average, but we had that last week and saw what happened. So we continue to have here a big fight between bulls and bears. Bulls bought the dip last week at 378, 379. But they have been selling here, the bears have been selling here 392. So we can continue here the range, or if we gap and go above 392, then big short squeeze up, in my opinion. So staying open minded, let's see if we are going to have a follow through continuation. But for the bull case and for a big bear trap, we need above 392. Above 392, in my opinion, goes if it stays above, if it goes and stays above 392, in my opinion, big short squeeze, new all-time highs above 394, and who knows where this will stop. Or if we are not able to go and hold above 392, we can continue the range. We have 387, 386 first support. Below that, we can give it all back into the range. 378, 379 as the key support. So really tricky action right now. One of the things is small caps. Small caps today had a gap and go. We have a gap at $222 to fill. It wasn't filled. It opened above the 8-day moving average and slowly grinding higher during the session. I continue to see very heavy put hedging activity here on small caps. But I prefer to wait for price to tell me what the hell is going to happen next. Because if we break 228, okay, if we break above 228, I believe we will have a big short squeeze all the way into $230 plus, making new all-time highs on small caps. So I'm staying open-minded. If we are not able to break above 228 and reverse back down, we have 222.8, the 8-day moving average, and we have a gap to fill 222. Lots of put options activity on this name. They are hedging heavily here. I prefer to wait before triggering any trade here. The cubes have been the most laggard, but today they actually opened above the 50-day moving average, push and closed above the 80-day, but still below the 21-day moving average. Today I got some Apple calls. It was a beautiful trade, playing for upside and a possible short squeeze. Closed a bit too soon, but still able to generate nice cash flow. So looking for Nasdaq and looking for the cubes here. What's the trigger for the longs? In my opinion, above 325, we can go. We have a gap to fill $330. Prefer to wait to see. Breaks above and stays above 325, goes and possible $5 upside here. Otherwise, we can continue the range. We saw this movie earlier last week. If it fades below 325, we have 322, we have 319 as possible supports, or if it breaks down, we have 312. Okay, we can continue here for longer, playing the range until we break one way or the other, frustrating both bulls and bears here. No one really knows what the hell is going to happen. One of the most beautiful trades, it was actually on Apple today, when I saw that after the Friday close, if you look for the Friday close, out of nowhere, big rebalancing that we saw at the end of the month on Friday. And considering the action that we saw on Friday, okay, looking for Friday, let's push here the chart, okay. What we knew today, we knew before the market open, we knew that considering the Friday close, it would be expectable some follow through considering that we had a bearish reversal candle on Thursday and a bearish candle also with a big fading on Friday. But today saw some relative strength here on the markets, with the markets pushing higher, not fading. And after the market open, I start seeing some buying pressure here on Apple. That's why I played for 129 out of the money calls. Why did I play that? Because I was seeing a possible break higher, making new highs, and 129 was my target. Why? 21-day moving average, 129.64. We also have a gap to fill at 132.79. So if bears were not able, after the Thursday and Friday action from last week, if bears were not able to push it lower, if it does not go lower, they are forced to cover, so it start going up. Because they are start covering, buyers step in, and it's a forced short covering rally up. So that's exactly what the analysis that I made. And Apple actually worked very well today, first day in a while that we saw a move above the 8-day moving average. So Apple break below the 8 and 21-day moving average here, all the way down, and today recovered the 8-day moving average. So we are slightly bullish on Apple going into the next couple of sessions, but need continuation. One of the things, Apple last week made a higher low, today made a higher high above the 8-day moving average. So if the action goes as expected, above 128, looking for 129, $130, that's 21-day moving average. Above that, gap to fill at 139.79, 132.79. So waiting, but for now, bull case scenario, higher lows, making higher highs, can extend all the way into $129, $130, but we need to see it. AMD, other name that I played, I locked my profits. You know that I trade for a living, I trade for cash flow, but instead of picking this week, I picked into monthly options expiration to give more time and to give a swing long trade here for long-term traders. So what is the game plan here on AMD? First, AMD, it's making higher lows, okay? So after making higher lows, what is expectable? To make higher highs. So the next logical trigger, in my opinion, is above $87, and above 87, in my opinion, can go all the way into 88, 89. Above 89 can extend all the way into $94 area. So this can be the first stages of a possible break higher. It didn't trigger yet, but as you know, I usually try to anticipate the move and play ahead of the move. It worked very well. It gave plenty of time to get into those calls. I locked my profits, but I'm looking for possible upside continuation. Next trigger, above 87. We have $89, $80. Above $89, watch out. $5 possible upside here, all the way into $94, $95 target. Looking for Facebook, I also gave a scalp and some lottery tickets here on Facebook. It worked very well. It was not easy, especially once again after the action that we saw on Friday. It was not easy, but making higher lows, higher highs. So intraday it was actually bullish, and but we need continuation. So what is the next trigger? In my opinion, above 267.5, we can go all the way into $270 plus. 274 is one of the targets, and above that 276 for a possible big short squeeze. So Facebook is one of the names that I'll be looking. If it breaks above 268 this week, and if it stays above, it can have a big short squeeze into 274. So keep it on your watch. Lemonade, another name that I had to the watch list. Today saw some bullish options activity. making higher lows. And what I'm looking, if it breaks above 134, that's the 8-day moving average, what shot can go into 140, $141. So keep lemonade also on your watch list. MGM saw bullish options activity on the name, holding the 8-day moving average. What's the trigger? Needs above 38.7. Above 38.7 can go all the way into the $40, making new highs once again. Moderna, another name that out of nowhere, really didn't see any news, not sure what the hell is happening here, but big spike on volume, also bullish options activity, needs a trigger. Making higher lows, needs start making higher highs. For that, needs above 161. Above 161, first target $170. So keep Moderna on your watch list. Microsoft, it was one of the names that before the market open, I gave the chart, shared my analysis on the name, looking for a possible gap filling above $240. Closed above the 8 and 21 moving average, but needs continuation. What's the trigger? Above today, highs of today's 237.5. Above that, gap filling at $240. So possible $3 upside here. Tesla, other name, making higher lows. What's next? Need above 725. Above 725, we have 745. Above that, we can fill the gap at 777. So keep it on your watch. Making higher lows, needs to make higher highs. If not able to recover the 8-day moving average and it fades, it can get ugly and reverse back down once again. So staying open-minded for those that possible scenario also. So before we go, I would like to share with you a bit the market breadth and why I played some calls today. Okay, and let's push here. Looking for some indicators that I use every single day as a gauge for the sentiment on the market. New highs minus new lows, pretty much bullish. Okay, we have a bull market with having more stocks making new highs than new lows. So for now, pretty much bullish. The same indicator online, it's bullish. Okay, this is a bear case as we saw on March. Let's put here the chart. Okay. That's a bear, oops, sorry about the line. That's a bull market. We had a bear market. We had a bear cross here, goes lower. We had a bull cross here, keeps ranging up. We have pullbacks on the way, but we are on a bull market, making higher highs, higher lows. Looking for the advanced decline issues, we had a pullback. We were a little bit overbought. And we had a very nice pullback, mean reversion to clear the overbought conditions, and we are already bouncing from the target that it was expectable. So right now, what we need? Higher highs. If the market not able to make higher highs and new all-time highs once again, that will raise yellow flags and we can have a reversal sell and a bigger correction ahead. Otherwise, we stopped exactly where we should, clearing the oversold conditions, the overbought conditions. And right now, clearing the oversold and possible upside continuation. One of the most positive things, in my opinion, for the day is actually the advanced decline issues printing new highs on the year. So we opened the year here, okay? And we made a higher high versus February highs. So right now, a positive signal for the market, but we need continuation. We were very oversold. The oscillator was very oversold last week. So after getting oversold, we needed a bounce. That's why today I also played some calls with Apple and AMD. I gave Facebook calls. I gave plenty of calls playing for the upside. I also played long workhorse shares. So gave plenty of signals for possible upside because we needed to clear the oversold conditions. Right now, we clearing that. Let's see continuation going forward or not. One of the yellow flags, and I want to see how it's going to update tomorrow. We need this indicator, the McLaren Summation Index, to give a bull cross as we have here, okay? Otherwise, this can be only oversold bounce, and if we have a continuation here with the indicator pointing down, this bounce will be sold, and we will have coming down and giving back the gains that we saw today. Looking for the volatility keeps fading here, and so right now no real also looking for the bonds, no real risk. Everyone was getting bearish on the market last week because of the yields going up and lots of panic. We don't have anything very similar as we saw last year, with a bear market, big bear market correction, with everyone panicked. So right now no risk on the market, no credit risk also. The Fed is behind the wheel, so right now no credit risk on the market. Looking for the Dow Jones, we bounced and recovered the middle of the range. We have lots of room for upside. Looking for the weekly chart, we held exactly where we should, right at the support. So the weekly chart also staying the bull case scenario here on Dow Jones. Looking for Nasdaq, it was oversold, okay, it was oversold, and it bounced exactly where it should. We need continuation. We need above the middle of the range and going. We have lots of room for upside here, so staying open-minded here on Nasdaq. What we have more small caps also today, but we need continuation. We need above 227.6. Above that we can go into 230, so something that I'll be looking for. SP 500, we also recover and bouncing from the lower support of the Bollinger Band. We making higher lows here. What we need to break above this line, going back and hold above 39.20, and above that we can go and make new all-time highs all the way above 39.50, but we need to see it. So the overall picture, looking for the market breadth indicators, we have some green flags. But we need continuation, okay? One day it will not make much difference if we don't have upside follow through continuation. Otherwise, we can give the gains back and staying on the range. So going into tomorrow, going all cash right now, staying open-minded, but after today action, if we break and stay above today highs of today, looking for a possible big short squeeze up in the next couple of sessions. Otherwise, if we go back below today low highs of the day, looking for a possible fading, and today lows on the day will be my first key support for the week. Okay, so thank you all for watching. Wish you all a great evening. Stay safe, everyone. Bye bye. See you.